Nils Anden, Interim CEO since May, and Patrick Kortman, Interim CFO since June. A strong product offering combined with focus on cost optimization actions continues to improve profitability. Nils, how would you summarize the Q2 report?
We're very pleased with it and I'm proud of the delivery of the Q2 results. Given the fairly turbulent quarter it was, we could still showcase a very good growth of 29%, but also a very strong underlying growth in our EBITDA that grew with 120% quarter compared to the last quarter, compared to the quarter in 2022. We also see a strong growth in our underlying activity with our customer base growing with 17%, and we also saw an ARPU increase of 9% compared to the same time period last year. Generally speaking, a very good quarter. Also want to call out our sequential growth in Netherlands, and where we think that we are now actually market leader, well ahead of plan actually. We also saw a very strong delivery, continued delivery from Relax Gaming that grew 47% on top line and delivered 5 million pounds in underlying EBITDA to the group, which is a very strong result.
Indeed. And 29% revenue growth year on year, that is impressive performance for the group. Patrick, what would you say are the main drivers behind this growth?
Yeah, so there were many markets, first of all, I would like to call out. So Netherlands is obviously a key driver of this 29%, and we saw a continuous sequential growth in Netherlands. But we also had very solid development in the UK, in Denmark, in Romania, in North America. So it was really not only one market driving the performance. Same time as we also highlighted in the report this morning, we have continued regulatory headwinds in Norway and Belgium. And if you would exclude the star performer Netherlands and Belgium and Norway, we would have had a 7% year-over-year growth. Belgium actually we're starting to see some positive signs that we're bottoming out, and we had a sequential growth now in the quarter. Then if you take from a product perspective, we grew by 19% sportsbook, and that was to some extent driven also by strong sportsbook margin, and which is natural. We had strong sports results from our perspective, but also increased use of bet builder products. We had a marketing mix change, which is driving, and also reduced bonus spend. Then casino and other products is growing also rapidly with 37% year over year, so causing that. And then as Nils mentioned here about Relax, which is giving a nice contribution also in revenues, which is with the 47% year over year growth.
Yes, that's a strong growth, and overall it's a testament to Kindred's balanced portfolio of markets and also products to see this performance. Indeed. Nils, if we move over to North America, we have taken important steps now in Kindred's one platform strategy with the launch of Kindred proprietary platform in 2 multi-product states. How would you say Kindred is progressing in North America, and if you can comment also on the early indications from the platform change?
Absolutely. I mean, we strongly believe that the Kindred platform is one of the best in the business and want to make sure that we can deliver that to all the customers we have in all the jurisdictions we work in and all the brands that we utilize. So being able to bring this as a step in that way to New Jersey and now in Pennsylvania is really rewarding for us as a company. I think it's also really nice to see that the results in North America in Q2 were actually pretty strong in the sense that we grew our top line by 17% while being able to reduce our losses substantially in the quarter compared to the time period last year. There's a few early indications on the platform. I know we've only been live since 10th of May in New Jersey, but the early indications show very strong growth in our KPIs. We've seen an improved conversion rate, so between registration and new depositor, of almost 2 times, and we've also seen our average daily revenue in New Jersey double in the time period after migration in comparison to pre-migration.
Great progress in Kindred's one platform strategy. And Patrick, underlying EBITDA for the group grew 120% year on year, and this is clearly a testament to the scalability of the operations. Can you elaborate on this, please?
Yeah, so first of all, the strong growth of 29% is a key driver of the improved profitability. At the same time as we are keeping a strict cost control, and the leverage now that we're currently getting now on the cost base is really that's kind of bearing fruit and driving now a very healthy EBITDA growth of 120%, as you mentioned. This is now we're reached 18% in underlying EBITDA margin, and if you would exclude North America, it would be a 20% underlying EBITDA margin, and this gives us also very strong confidence now in the years ahead and towards our financial targets for 2025, where we have an underlying EBITDA target of 21 to 22%.
Yes, that's very clear, and so you are pleased with the way Kindred is progressing towards its 2025 targets and the guidance for 23.
Yeah, so after half year, we are the first half delivered 105 million approximately in underlying EBITDA, and that includes also 3 million in non-recurring costs, so that occurred in the first quarter. Now, if the guidance for the full year is at least 200 million, and with the performance so far in the year, we are very confident that that's achievable. Then in terms of performance towards the financial targets 2025, I think we are delivering on all key strategic initiatives. We have the existing market portfolio of core markets that are delivering solid growth. As said, if you exclude Netherlands and Belgium and Norway, we had 7% year-over-year growth, and we continue to take market share in many of our key markets. Netherlands, stellar performance, reached 63.6 million in revenues for the quarter. That's 13% up sequentially. And we are confident that we are now number one in the market, which was the target for this year. KSP, we are aiming for launch of KSP towards the end of this year, first test market. That will provide us with an increased scalability for the group and a margin enhancement, as we have discussed in previous quarters. Relax, a very solid development again. 10% of the group EBITDA came from Relax, and just a strong testament to the team, Relax, and how they're performing. And there we have further levers to utilize Relax more for Kindred and with more exclusive content. And then we have North America, as Nils just discussed here, which significantly reduced losses, and a really good progress there as well. So all in all, we remain confident in the financial targets set out for 2025.
Yeah, really pleasing to hear this continued confidence. And we're already a couple of weeks into Q3. Nils, what are your expectations for the remainder of the year?
As Patrick mentioned, we're confident in our guidance that we have given for 23 of at least 200 million pounds in underlying EBITDA. If we look at the start of Q3, it's been a very slow period. We're in the slowest period of the year for sports, naturally in the middle of July. But we still had a fairly good trading update where we saw average daily revenue come in at 2.93 million pounds per day. This is roughly in line with the average daily revenue in Q3 last year. But then we have to remember that this first period is a very slow period in terms of the sports calendar. If we compared it to the same time period last year, we saw a growth in our average daily revenue of almost 20%. So we are pleased with the start of Q3. Looking ahead, the European leagues are of course kicking off in the next couple of weeks, which we're very excited to piggyback on the momentum we saw in Q2 to really continue to take market shares in our core markets. But we're also seeing the Women's World Cup that has kicked off now being a really exciting event for us. We've seen turnover on the Women's World Cup go up with 55% compared to the previous World Cup held in 2019. And that is with it being held in Australia, New Zealand, so the time zone is not perhaps best for a European footprint at least. But there's a lot of exciting things to look forward to for the Kindred Group in the rest of the year.
That's very exciting to hear. Thank you both very much for your time.
Thank you.
Thank you, Linda.